Hello, my name is Ojeda and my partner is Jostin Parrales. Our course is Oxford and our topic is the impact of foreign direct investment. The question is evaluate the impact of foreign direct investment for economically less developed countries. When we're talking about less developed countries, we are referring to the countries that nowadays have poverty. Uh, the plan is this. First, I am going to make an introduction in which I will explain some key terms that you should understand in order to understand what we are talking about. Then I am going to talk about the advantages of the foreign direct investment, and my partner Justin will talk about the disadvantages of the foreign direct investment. And at the end, we're going to make an evaluation in which we will say our opinion about this method. So first, what is foreign direct investment? According to the Investopedia, the in the according to Investopedia, the foreign direct investment is an investment made by a company or entity based in one country into a company or entity based in another country. Typically, these have a significant degree of influence and control over the company into which the investment is made. Because the expansion of the FDI is expected to continue, it is critical for developing countries to assess the value of the foreign direct investment for their own development plan. In this, uh, mm, Now we can make some generalizations about the disability of the foreign investment. So that so now we are going to talk about the advantages of the FDI. One of the advantages is the capital improvement. Capital injections can help to break the poverty cycle by injecting much needed capital goods and influence. This means that, for example, uh, Venezuela that have poverty nowadays, they need they have a poverty cycle that never ends, and what we can do to reduce this poverty is to inject capital and needs that capital goods that the country needs, and then the poverty will reduce. Another thing that we can say is that the foreign purchase of the domestic assets brings money into the capital accounts of the balance of payment, enabling more improved imports of foreign consumers and capital goods. Another thing is that this can induce LDC governments to invest in infrastructure to support the new firms. This may have a spin-off benefit of the country at large. If the project works, they have other useful applications. The another thing is the poverty the that pro, that this using applying this uh, the method can provide opportunities for enhance research of and development, which may expand technical capitals in the integrated company economy. This also stimulates domestic industry when the multinational corporation buys locally produces capitals, goods, and services. Another thing that advantage that is important is that we can increase the income, the employment, and the training. What in which way we can increase the employment? Where foreigners firms hire significantly from the domestic workforce, this increased development and increase employment incomes and tax revenue. The increased incomes acquiring to the works to the multinational uh, multinational multinational corporation is subject to taxation. The increase in the tax revenue may be used for development purpose, such as the improvement of education and healthcare. That it's good for the country, and the countries that, for example, need have a lot of poverty need education to because education is one of the first things that we can do to reduce the poverty. Where another advantage is the market efficiency and choice. Multinationals corporations may compete with complacent domestic industry. The added competition should lower the price and increase market efficiency domestically. If the multinational corporations help a country realize its comparative advantages, world trade price is enhanced and lower price results. For example, if when we refer to choice, we are talking about the world trade price. For example, if I can make a choice in which product I decide to buy because the prices are lower, and then if I'm in we may but may in that investment, the the consumption of one product of a company will increase, so the economy of the country will increase at the end of the year. For domestic consumers, the arrival of foreign firms initiate meaningfully choice in the market for goods and services. Now, my partner Justin will talk about the disadvantages of this method. Thank you.